You're watching CNBC.
Does a good job for 8 records in a row.
Typically, you might be able to attribute it to the double witching today, but stocks have been up 10 days in a row.
So 2 debacles du jour.
Can't extrapolate to the market from these 2 stocks, but certainly it's illustrative of what an investor should know can happen.
Greg Miles taking a look at the first Russian company to ever list on the New York Stock Exchange.
Stock prices have been all over the map today as rumors and the monthly double witching expiration whips the market around. Technology stocks mixed as IBM soars, but Intel stumbles. The bank stocks back in record ground while brokers are doing better. The dollar bouncing back after Treasury Secretary Rubin voices support. Bonds are dipping while commodities continue their comeback. Good afternoon, everyone. Welcome to Street Signs. I'm Ron Insano. Well, copper prices are soaring to their highest level since August. Investors discounting rumors about a large hidden stockpile that would replenish 6-year low supplies at global warehouses. The latest economic data show that consumers are in a buying mood as we head into the holiday shopping season. And walkouts at GM plants in the U.S. and Canada caused the first decline in industrial output in 7 months. Delco Electronics, a unit of GM Hughes, is taking a $45 million charge against earnings. GM Hughes also announcing a management shakeup at Delco. Now we'll take a look at each of those stories, plus much more straight ahead. First, though, we'll see where we stand on Wall Street. As we said, the market all over the map, whipsawed by some rumors that longtime bull Abby Joseph Cohen of Goldman Sachs, the co-policy chair, had turned bearish on the market. Well, I spoke to Abby just a few moments ago. She assured me that that was not the case. While she acknowledges that profit growth has slowed down of late, she says inflation and interest rates remain positive. Her asset allocation model remains the same. 60% stocks, 25% bonds, 10% cash, 5% commodities. Still has a 6,500 target for the Dow. That, of course, will be revised in December, as she does every 6 months. But she remains quite constructive on the stock market and suggests that this is still a bull market trend. And indeed, the market is getting back in gear on the plus side in this final hour of trading. As we look at CNBC's market machine, the Dow holding on to about a 25-point gain at 6337.97. IBM now up 6 3/8, accounting for 18 points of that gain. Disney's up $1.25. Procter & Gamble up 1 3/4, and Merck up 7/8 of a point, while Caterpillar is on the downside. Volume on this expiration very heavy, 435.1 million shares. As for market internals, just barely positive. Breadth has been flat all day long. 905 issues are unchanged. The NASDAQ Composite on some late-day weakness in Intel. Breaking down, Microsoft also on the downside, leaving the NASDAQ down 9 3/4 on 454 million shares. Standard & Poor's 500 holding on to a $1 gain, trying to stay in record territory. The Dow, by the way, also trying to get its 8th straight closing high, while the 30-year Treasury bond has slumped a bit here, even despite some soft industrial production figures. The bond down a half point. The yield, though, still below 6.5%. The dollar mixed against key foreign currencies, down against the yen, up fractionally against the mark, and pretty much flat against the British pound. For more on today's market action, let's head down to the floor of the New York Stock Exchange. Paula O'Day is standing by. Paula, a specialist at Cernomer Weissman. Paula, good to see you. Thanks for being with us today.
How are you, Ron?
All right, thanks. What's going on down there?
Well, you've got a lot of buying going on down here. Market's up $25. You've got the bonds down. The breadth of the market seems to be very good. You've got the Dow up 125 points on the week. And from the beginning of November, we're up 290 points. When's it going to stop?
Well, that's my next question to you.
I don't think it's going to stop until we hit about 65, 6,600. I think you're going to see more on the upside than the downside.
Are you getting indications that mutual fund flows just continue to stream in?
Oh, absolutely. It was in the Journal this morning. There's so much money going into mutual funds after, I believe, all the tax redemptions that went on. People just don't know what to do with their money now.
All right. Now, what do you see as a problem here? Are you worried that the bonds rolled over today, or that late in the day some select technology stocks like Intel or Microsoft suddenly hit an air pocket?
Maybe, and it's a probability, but I mean, with the techs the way they're going lately, all the news that went out, the book to bill, even though they're revising that, coming out with a new indicator, I think that you're going to see the high techs bounce a little bit more. We've got more upside on this market than we do downside.
All right, what's ahead next week that you'll be watching closely?
Well, we have to watch all the indicators closely. I mean, I can't specify one thing. We really have to keep our eye on everything in this market. Because one downturn, I mean, you don't want it to be severe, but it could be.
All right, what about the dollar? Is that at all a concern at this point in time?
Oh, sure it is. Yeah, we always keep our eye on the dollar. As to where it fluctuates, we always have to really be alert. And just as to where it trades with the yen, Canadian, the pound, the Deutsch, we're really alert.
All right, Paula, thanks very much. Have a good weekend.
Ron, thanks. Have a good one.
All right, Paula O'Day, specialist at Surnomer Weissman. Well, Merrill Lynch raises its target price on IBM, sending the stock higher in heavy trading today. Joining us now from the New York Stock Exchange with more on that story, our own Bob Pisani. Bob?
Good afternoon, Ron. Well, the Dow is indeed well off its high of the day, but don't blame it on IBM. It is the Dow leader right now at 142 7/8, up 6. That is an intraday high, Ron, not seen since 1987. Indeed, its all-time high was 175 in August of 1987. Now, the news, of course, Merrill Lynch analyst Daniel Mandris had raised the target price on the company to $195 for 1998. Now, since its recent low, that was 90 and a quarter. Let's take a look at our stock chart for IBM here. On July 23rd, 90 and a quarter was the low. IBM has moved up 57%. The S&P Computer Group, its companion group, risen only about 39%. Now, he sees fourth quarter revenue growth of 13.8%. He says that is the third quarter in a row of double-digit growth. With the full-year growth, his estimation, 10% in revenues. The key to the growth, he says, are personal computers and service division, both of which grew at a 25% clip in the third quarter. Mandris also says IBM's European business is doing much better after a small decline in the third quarter. What about the next 2 years? Mandris says he sees revenue growth in both years of 7 to 8%. And Ron, and other stocks today, other computer stocks, Compaq, 76 and a quarter, down 3/4. They announced, of course, yesterday they were lowering prices on their Presario line. Digital Equipment Corporation, 34 3/8, up 1 1/8 after the CEO said he saw a reasonable fiscal 97 and a profitable second quarter. Sun Microsystems, 58 3/4, up 5/8 right now. Back to you, Ron.
All right, thank you, Bob. Bob Pisani at the New York Stock Exchange. Russian company Vimpel Communications is the latest foreign firm to hit the IPO market. We will take a closer look when Street Signs continues. Stay with us.
This program is brought to you by PC Financial Network, America's leading online brokerage.
These days, everyone's talking about online investing. Fast-breaking news, quotes, stock charting, databases on companies and mutual funds, and instant trading.
We continually add new features to help investors make fast-informed decisions, including free information from S&P, Zacks, Lipper, and more.
You can open a PC Financial Network account instantly and could be trading in seconds. Visit us on America Online, Prodigy, or the Internet. Or call us now for more information.
Today, let's talk about where to buy your stock, because savings on commissions is part of what managing your money is all about. On a trade of 200 shares at $25 a share, Merrill Lynch charges $129. Charles Schwab, $89. Quick and Riley, $60.50. But look, Waterhouse Securities charges just $35. That's a big difference in price. There's also a big difference in services. Waterhouse offers free investment information, including free S&P stock reports, free IRA accounts, free dividend reinvestment. We don't have time to go through every feature, so I suggest you do your own homework. Call Waterhouse. They'll send you this package of free information regarding dozens of services that save you money. Open an account and get this free S&P stock guide, which will come in handy next week when we talk about PE ratios.
In a sea of mutual funds, may we interest you in a boat? Call 1-800-MAINSTAY for a prospectus containing more complete information.
For a proven group long-term disability package, call your broker or the Fortis Castle. To better manage disability costs, call your broker or the Fortis Castle. Fortis, solid answers for a changing world.
Tonight on CNBC Worldwide, the economy is holding strong, a record high in the stock market, but layoffs begin in the corporate world. What will it mean for your investments? Find out in the Week in Review on Business Insider. Then on Business Tonight, as Texaco prepares for a picket, we'll look at a likely scenario for a speedy settlement. Plus, the first Russian company ever is listed on the New York Stock Exchange. But who will look at the books of the foreign company? Tonight on CNBC Worldwide.
Chemicals is still performing pretty well. For BP alone, we're making over a 20% return in our chemical sector. But it's nothing like the return we made last year, which was about 40%.
That was John Brown, CEO of British Petroleum, a guest earlier today on CNBC Squawk Box. All right, time now for today's Market Lab. Our stocks editor, Joe Kernan, here to handle just those chores. And interesting day. A couple of potholes in the road, the kind of a Art Cashin's landmine and gold mine scenario. Two of the latter, one big one of the former.
You can tell early on, Ron, if what I saw, stocks halted, material impact on earnings when they lose a huge customer, and then you see what the price is. If it's $3, you go on to the next one. If it's $30, you wonder what's possible here. And let's look at the first one, because that's what threw up a flag this morning on ITI, and that's what can happen. $270 million market cap, and when it opened, it was a $90 million market cap. And market cap is spread out among all the shareholders, and you'd never know there was. It's tough to remember that there's risk in this market, perhaps, as we hit a new high every day, but something like that can happen, or even a much bigger company and perhaps more established health management. Same kind of thing can happen here. That stock down 7 or 8 points after the company forecast lower than expected earnings in the current quarter and for 1997. I think the current quarter was the 9th and for 1997. That's a downside. Maybe the upside today, and the reason people invest in the stock market, Ron, is IBM a couple years ago at $40. Yep,
1993.
Yeah, Lou Gerstner. Where's this guy from? RJR. These are computers. You can't smoke computers, right? If your computers are smoking,
the way I use them.
I think Apple had that problem one time with some smoking computer. Anyway, he did apparently know what he was doing. What's doing it today? I've got the Mandrish printout here, and I've got all the details here, Ron. Let's go over and clarify a couple of things. Number one, looking for revenue growth around the globe in the fourth quarter of 10% to $24 billion, which is pretty incredible, $24 billion. To do that, you need 13.8% U.S. growth, is what Bob was saying earlier. I think he talked full growth, 13.8. It's actually in the U.S., 13.8. What's going right? Business is improving in Europe. And Mandrish has a cautious estimate now of just 2.5% growth versus a decline last year, a decline in the third quarter. So it looks like it could even be better, which would even help more. Services and PCs are the two real bright spots, and they should match, or he thinks they will both likely match the third quarter growth, 25% for services and PC, and that certainly is.
And IBM's been adding employment in the service division for quite a number of months now.
And services is where it's at, apparently. General Electric, in that Business Week article, that's 60% or 40% of our profits now coming from
their
GE's
profits.
Their profits. The parent of this company, exactly. All right. He goes on to say some interesting things, Ron. IBM's valuation over the next 12 months will increasingly be based on a 3-year pattern of $11 in earnings for 96, $13 for 1997, and a $15 estimate for 1998. He says, and he said this back that we talked about, it was about 3 or 4 months ago. He talked about investor conviction that IBM would not disappoint again like it had a couple of quarters in the last year and a half or 2 years. And if you look on a chart, you can go back and see where IBM either made its quarter, but then the CFO said some things that were negative and turned around the stock on a dime. Remember, in July, it broke under 90. We can barely remember that, but IBM broke under 90, turned around and traded higher very quickly. He says as the company continues to meet its quarter, the conviction is going to come back with investors. You're going to see multiple expansion, and he thinks we can get to 13 times earnings. 13 times $15 for 98 is $195, and that is the target.
Now, people are beginning, and they often do this at peaks in market cycles, but that notwithstanding, multiple expansion is being aggressively discussed again for the entire market. If you assume inflation is really 2% instead of the estimated 3 or 4%, that means that the average multiple for the stock market could be 18. So even then, IBM would be trailing the market multiple, even as a growth stock at this point in time.
Well, as the economy slows and earnings don't grow as much as they used to, we do need some way to explain a market that continues to trade higher on lower interest rates. And I think that explanation is called multiple expansion, isn't it?
It is indeed. And that's you have to hope that it works going forward.
That's the two-word explanation for why slower earnings can mean higher stock prices, but I think that's what it means. You spoke to Abby Joseph Cohen. That wasn't where the problem was today, apparently.
No, she did admit that profit growth is slowing to an extent, but she also said that because inflation and interest rates are so favorable that there's no reason to change her forecast for the market. She makes a rolling 6-month projection for the Dow every 6 months. If you go back to the beginning of the year, she said by year's end we'd hit 6,000. Middle of the year, she revised that to 6,500. Her next revision to her Dow forecast won't come until early December. So 6,500 remains the target, and the market is only hop, skip, and a jump from that.
One other thing to think about, Ron, 60% of IBM's revenues in the fourth quarter come in December. It's not December yet. So there's a lot that can happen. Mandrish is high on the street, $4.32. So we'll know very soon whether this whole scenario will play out, but the market's already playing it out, up 7.
All right. Thank you, sir.
Okay.
All right. Some of that coming from options expiration as well. When we come back, a look at the yield curve. We'll do that when Street Sounds continues in a moment.
You're watching CNBC Worldwide.
The book to read in 1996. Don't be left out of potential profits when the trend of the market changes. At the Crest of the Tidal Wave by Robert Prechter. Join the thousands of people who have read it. They are prepared. Are you? There's still time to act. Call 800-336-1618.
In aims to answer the call of the wild, one must soar with the grace and ease of the majestic eagle. Have the heart and soul of the mighty bear. And seek comfort in the great outdoors. It is here that our ancient spirits find a balanced path in our civilized world.
Their goals are as basic as a first home, an education, a secure retirement. Yet they own over half of all the stock in America. They are individual investors, and for them nothing is more valuable than information. Today, NASDAQ is delivering news about companies, performance tracking, even timely stock quotes, instantly. So if you're an investor who seeks vital information, you now know where to find it.
All right, some tough sledding for the credit markets today, even though there were favorable factory data out today suggesting that industrial production for the first time in 7 months fell by a half percentage point, while capacity utilization or factory use also declined, largely thanks to the strikes that crippled General Motors for a couple of weeks, one from Canada and one brief one in the United States. That held back industrial production and factory use for the reporting month of September, and as such restrained those numbers. But now on top of that, it does appear that consumers are a little more confident. The University of Michigan's preliminary November figures showed that there was a bit of a bounce in consumer confidence, and you couple that with some wholesale inventory and wholesale sales data that was also slightly more favorable than expected, and there was a little bit of a dent in the bond market today. However, underpinning the bond market going forward could be the balanced budget talks that get more serious as time goes on between the White House and Congress. Even though President Clinton has disavowed his support for a balanced budget amendment to the Constitution, there is still a growing belief that a balanced budget is again within reach should the Republicans and Democrats be able to work things out here in the first year of President Clinton's second term. All that said, a bit of a rest in the bond market today. The 30-year Treasury bond late in the day down about a half point at par plus 1830 seconds. The yield yesterday at an 8-month low. It's ticking back up a little bit today, but it is still comfortably below 6.5%. Well, as you can see on the bottom of the screen, stock market is soaring once again and might be heading for its 8th record close today, the 10th day in a row that stock prices are up. How are mutual fund investors reacting to all this? In October, investors poured about $13 billion into stock funds, 25% less than the previous month. November figures aren't in yet, but the post-election rally could help draw even more money back to funds. Joining us now to give us an update on the mutual fund industry, Jessica Bibliowicz, Chief Executive Vice President at Smith Barney, who runs the company's mutual fund group. Good to see you again, Jessica. Thanks for being with us.
How are you?
I'm doing all right. What do the fund flows look like right now?
Well, actually, we have seen the very expected pickup post the election. I think people are waiting to see the outcome, but it's not quite as fast as you'd think. I think people are also waiting to see capital gains reporting coming out from the funds. But there is a pickup. There is a lot of confidence, but we're pretty focused on also warning investors of volatility and to really kind of stay with the course and go in for the right reasons.
All right, let me go back to the first thing you mentioned, the capital gains considerations at the end of the year. Could you explain in more detail what that means and why people get a little bit chary about their mutual fund holdings around this time of the calendar?
Well, this time of year, after the close of the month of October, people are looking, the equity funds actually distribute their capital gains. And what investors don't want to do is buy at that point and get a huge capital gain. It's sort of coming in after the party and just getting the hangover. Particularly at our fund company, we're very focused on being very tax-sensitive investors. So we actually look carefully at the tax situation of all of our funds. And I think we've done quite a good job of making sure that we've minimized those capital gains for investors. But they will typically wait as fund companies go record with those capital gains.
All right, now you said in your conversation with investors that you're warning them about volatility. Does that mean you're getting nervous about the run-up in the stock market that we see here?
Well, actually, Ron, we feel terrific about the equity markets long term. I mean, if you look at it right now, inflation's not a factor. Interest rates, for the most part, have been coming down. Slow growth is good for the equity markets, and there's enormous demand for the product as people focus more on their retirement planning. So the overall outlook is terrific, but I think you really want to make sure that we manage people's expectations that, 8 to 12% is really normalized returns in the equity markets and that we're enjoying a very good ride right now.
All right, let me ask you how you manage expectations when the Dow was up 35% in 1995. It is up about 24% in 1996. That's 60% in 2 years. Not unheard of, but way out of bounds with history.
Absolutely. And what we really try and do is make sure that people are focusing on the basics of investments. The first is to get advice and to know what you're going for. What are your goals? Are you trying to, long-term retirement, children's education? The second is we really do recommend systematic investing, so they're just buying every single month and they're going in there consistently. The third thing is that people should really know that there is volatility in the market, and the worst thing they can do is sell into that volatility. What we want to urge investors to do is to be patient, not just to buy at the tops, but to stay with it.
I am going to have short sellers. I am going to have short sellers calling me up screaming that the worst thing you can do is sell into volatility. There are a lot of them who say right now the worst thing you can do is buy at this point in time.
Well, actually, we really think mutual fund investors are a little bit different, Ron. As you know, they're looking to fund something in the long term, and the best way to buy mutual funds are to be long-term in perspective. So, once again, we are very favorable on the equity markets. Just please have reasonable expectations.
Let me ask you about reasonable expectations in the compensation arena when it comes to brokers selling mutual funds. The Wall Street Journal profiling practices at a rival firm today. Are there unusual incentives for brokers to sell particular mutual funds, whether they're within their own company or other such funds, where we start to see conflicts of interest develop from the compensation schemes?
Ron, as you probably know, I can't speak for the strategies of our competitors, but what I can tell you about Smith Barney is that we really operate on a truly level playing field. Our financial consultants are really out there to provide investors with pure advice based on what their needs are. The worst thing we could do is create an environment where they're selling one product over another because it's good for them and not necessarily good for the clients. So at Smith Barney, we are completely levelized, whether it's our funds or somebody else's funds. It's based on what the client needs.
All right, let me ask you about fund of funds. I know that's an area in which you are an expert, and there's a lot of that going on since liberalization of securities rules came about earlier in the year. Do you think a fund of funds environment, if it should accelerate beyond what we already know, presents a pyramiding problem in the stock market, where if there are too many of them, if they become too plentiful, that we might see some sort of leverage evolve, as was the case in Japan in the 80s or the U.S. in the 1920s?
No, I don't think so. I think the real positive case for these quote-unquote fund of funds is that they provide clients with the much-needed asset allocation. Typically, as we've watched investors over time, Ron, and you've seen this, they go into whatever is performing well at that particular moment. What the fund-to-fund structure does is it gives them a broader allocation. So, in fact, I think that we will not see that risk in this country. Also, many fund companies won't be able to successfully do it because to have a fund of funds that's effective, you really have to make sure that all of the underlying funds are, in fact, different and that, in fact, they don't all own the same securities. And that's where I think with our concert series, we have been so effective. There is very little duplication in our funds.
Quick question just about the near-term direction of the stock market. Any of the strategists or technicians in the Smith-Barney family calling for a correction in the short term?
No, in Smith-Barney Mutual Funds, we are very comfortable with the long-term outlook on the equity markets. It's just that they have been so terrific. I'm very focused on investors and making sure that they go into the markets for the right reasons and the right expectations. But as I said earlier, the fundamentals for the stock market, they're very good.
All right, we'll leave it there. Good to see you again.
Great.
Thanks for joining us.
Thank you.
Jessica Bibliowicz, Executive Vice President at Smith-Barney's Mutual Fund Group. When we come back, President keeps U.S. troops in Bosnia another 18 months and sends forces to Zaire on a humanitarian mission. We will have the details when Street Signs continues.
You're watching CNBC Worldwide.
Since Oldie introduced the Smart Trade commissionless trading account, there have been a few misconceptions. Here are the facts. There are absolutely no markups or commissions. Oldie provides market order trade executions in seconds, and you receive full service including original research and investment ideas. No other brokerage firm guarantees a more competitive service. The difference is simple: no commissions. Smart Trade, full service commissionless trading. Call 1-800-USA-OLDIE.
Today on CNBC Worldwide, on Market Wrap, Deutsche Telekom hits Wall Street for the first time on Monday. What is the outlook for the stock on day one of trading? Are investors interested? That's today on Market Wrap, followed by Business Insiders and Business Tonight.
Did you know there are over 1,800 companies that sell life insurance? That makes it impossible to compare the rates of every company. And since the rates for the same coverage are often different from company to company, many people overpay when buying term life insurance. Well, there's a free service from Select Quote Insurance Services that can help make sure you don't overpay. Select Quote continually compares the costs of term insurance policies from many top-rated companies like Kemper, Travelers, CNA, and others. Call toll-free and Select Quote will mail you 5 of their lowest quotes in a simple, easy-to-read comparison. For example, a man age 40 who doesn't smoke can get $100,000 coverage for just $169, or $250,000 coverage for just $310. And you can lock in these low rates for 10 years. Don't overpay. Call Select Quote now and see how much you can really save.
For a free comparison of the 5 lowest cost term policies for you, call Select Quote at 1-800-938-3600. That's 1-800-938-3600.
What's the right grip feel like? Should you use the same club on every chip shot? The answers are in Golf Digest. No matter how well you play, you'll find tips and advice that will dramatically improve your game. Guaranteed. Want to know where the slot is at the top of your backswing? Or if you're good enough to carry a 4-iron, subscribe to Golf Digest. 12 issues are only $19.77. You'll also get our video, Hit It Longer and Straighter, free.
Call 800-851-1400. That's 800-851-1400.
You're watching CNBC.
Good afternoon, everyone. This is Street Signs. I'm Ron Insana. Here's what the markets are doing as we head into the final stretch of trading today. It's a volatile day on Wall Street. An options expiration Friday is underway. We have seen the Dow gained more than 60 points, fall all the way back to about unchanged, and it's now up 43. IBM accounting for more than half of that gain thus far this session, up 7 3/4 points, the equivalent of about 24 Dow points on the upside. We're also seeing Disney lend a hand to the rally today, and a handful of other stocks as we look at CNBC's Market Machine. Let you know that this could be the 8th record closing high in a row for the Dow Industrial Average, 10th straight day on the upside. Hesitate to say unprecedented, but it's certainly a rare set of record closing highs. The Dow at 63.56.97 a month and a day ago closed above 6,000 for the first time, and it has just ripped through these century marks as if they didn't exist. Volume is inflated by the options expiration at 435.1 million shares. Merck, Procter & Gamble, IBM, Disney, all doing better today. Caterpillar, one drag on the Dow thus far. Market internals, though, despite the gains in the blue chips, rather flat, with advances beating declines only 12 to 11. 894 stocks are unchanged. We have the NASDAQ Composite on some late weakness in Intel and Microsoft, slipping about 6 to 1264.50. Volume there just under 500 million shares. Standard & Poor's 500 also trying to score another record closing high, up about 4 points. Just a few points away from program trading restrictions again today. They were already imposed earlier on. More than 100 times they've been used at the New York Stock Exchange this year alone. All right, as for the bond, it is still on the downside. It is barely off the lows, down about a half point. The yield, though, is quite nice for some at 6.45%. The U.S. peacekeeping mission in Bosnia has been extended for another 18 months. Terry Keenan's at the news desk with that and the rest of today's top stories. Terry?
Thanks, Ron. We start with some news regarding that lawsuit against Texaco. The plaintiffs in that discrimination suit will be holding a news conference at 5:30 p.m. Eastern Time today. The details of what will be said at that news conference are unclear, but we will have a live feed of it that at 5:30 Eastern Time. In other news, President Clinton is sending American peacekeeping troops to 2 international hotspots. The president today announcing the extension of U.S. military presence in Bosnia for another 18 months. That in order to give that country more time to get back on its feet. The new mission of 6,500 U.S. troops to Bosnia is in addition to American forces scheduled to go to Zaire in order to help deliver humanitarian aid to refugees there. Well, in economic news, consumers are feeling a little bit better about the economy. This according to the University of Michigan. Its preliminary consumer sentiment index for the month of November rising a couple of points. It's now at a reading of 98.9. And the nation's factories, mines, and utilities slowed down in October. The Federal Reserve reports output fell by a half percentage point. It's the first decline in 7 months. Analysts say most of the decrease was linked to recent strikes at General Motors plants. Those disruptions have also taken a toll on another GM unit. Delco, a division of GM's Hughes Electronics, will take a fourth-quarter charge of $45 million. It also announced a change in its leadership. But Michael Armstrong, CEO of Hughes, told CNBC Delco still has plenty of future potential.
64% of our total costs are in materials, and we're going to team up with GM's worldwide purchasing and put leverage on those material input costs.
Stand by.
ADT has delivered some bad news to ITI Technology. The company sending a letter on Thursday to ITI announcing a sharp cutback in orders for the first quarter of 1997. No specifics as to why ITI is losing the business. The company says the cutbacks will have an adverse effect on revenues and earnings next year. And apparently investors feel the same way. Shares of ITI have been suffering from double-digit losses all day. And that is the latest from the news desk. Back over to you, Ron.
Thank you, Terry. More than 50 foreign companies have listed their shares on the New York Stock Exchange this year. That's a record, one of many. One of them is a Russian cellular phone company that aims to make big bucks off the Russian market. But is Vimple a strong bet or a bad one for U.S. investors? CNBC's Greg Miles reports.
Russian corporations are among the world's worst managed companies, having suffered from decades of communist mismanagement. But don't tell that to Augie Fabella, CEO of Vimple Communications, a Russian cellular telephone company which has listed its shares on the New York Stock Exchange, and with more than a little fanfare.
The growth prospects are tremendous. We've gone from 0 to over 45,000 subscribers in 2 years, from 0 in revenues to 100 million in revenues last year. Our growth has been tremendous. The market is still very, very young. There's a tremendous demand for wireless.
For U.S. investors, Vimple is a very different kind of Russian company. Fabella was born in the U.S. and educated at Stanford, and he helped start the company in 1991, along with Western entrepreneurs and former engineers from the Russian military. About 50 foreign companies have listed their shares on the New York Stock Exchange in the past year. That's an all-time record. But Vimple Communications is the only Russian company that has met strict U.S. requirements. Vimple's Western management has been crucial to making sure the company can meet stiff standards of both the U.S. Securities and Exchange Commission and the NYSE.
We were a private company from day one. From day one, we've had U.S. GAAP books audited by Ernst & Young from day one. We've had Western law firms involved, which really made us stand out, and that has given us that unique opportunity to be the first ones here.
Greg Miles, CNBC Business News.
All right, we have a little breaking news coming in from Texaco. As Terry Keenan told you just a few minutes ago, it was expected the plaintiffs in the case would hold a news conference at 5:30 Eastern Time. Right now, Texaco is coming out saying that it has settled its race discrimination suit, the details of which are as yet unavailable. The company settling a race discrimination suit brought by its black employees, and that comes to terms less than 2 weeks after the disclosure on audio tape that some of the company's top executives made offered racial slurs in private conversations. Kwesi Mafumi, who is head of the NAACP, will be joining Bill Griffith and Terry Keenan on Market Wrap a little later at after 4 o'clock Eastern Time. Texaco shares pairing some earlier losses, still down a quarter point here at 98, now down an eighth at 98 1/4 point. You'll recall that the Reverend Jesse Jackson of the Rainbow Coalition was threatening a boycott of Texaco products and also selected picketing of Texaco gas stations to begin tomorrow. So Texaco, again, settling that race discrimination suit, but we do not have any details as to the monetary awards that will be given those who sued the company. The stock now turning positive up a quarter at 98 5/8. Well, Bill Griffith will have the latest along the yield curve when Street Signs continues in just a moment.
This program is brought to you by Ceres Securities.
Why is Ceres Securities one of the fastest growing deep discount brokers? With Ceres, you can trade as many shares of any OTC or listed stock you want and pay just $18. No restrictions. Plus, whether you trade by phone, internet, or live broker, you still pay just $18. No extra charges. No wonder Ceres is rated #1 for best commissions by Worth Online. Ceres Securities. Simple, no-nonsense trading.
For a proven group long-term disability package, call your broker or the Fortis Castle. To better manage disability costs, call your broker or the Fortis Castle. Fortis, solid answers for a changing world.
Get your pen ready to put something at the top of your list. Try Investor's Business Daily for 2 weeks free.
Investor's Business Daily provides the entrepreneur with valuable information in a very condensed format. And that's extremely important. I mean, most of us, my friends in the business for themselves, work 20-hour days. And as much as we can cram into that, and as much information as we can get quickly, is important to us.
In my job, you have to read an awful lot of publications. Investor's Business Daily tends to go home with me because I always spend about 15 or 20 minutes a day going through IBD. I have to admit, I start with the stock tables. I always look at the executive updates section, those articles that really talk about a particular company's strategy and why it's performing the way it's performing.
You receive the tape 100 Ways to Improve Your Investment Results, plus 2 weeks of Investor's Business Daily, absolutely free with no cost or obligation. Call 800-819-7300. Call toll-free now and get your free subscription, plus your free gift.
America Online makes your life easier and more fun. You've got mail. You'll see. Just give it a try. Call this toll-free number now for everything you need to get started. Try America Online.
In today's Ticker Talk, regardless of whatever happens on Wall Street today, this run has been unusually impressive. But aside from the 5% gain in the Dow in just the last 30 days, its performance has been truly remarkable over almost any time frame one picks. For the year, the Dow is up almost 24%, up almost 60% since the start of 1995. Over the last 5 years, the Dow has been firmly ensconced in the second biggest bull market in history, surpassed only by the Roaring '20s run-up. Now, the Dow Transportation Average, recently written off as dead, is again within striking distance of its all-time high of 2296, coming back on the wings of airlines and driven higher by the consolidation in rails. Of the Dow trio, the utilities are the farthest away from record ground, though they recently hit an intermediate high of 236. They're up again today on the strength of natural gas stocks. Now, that interest-sensitive gauge accurately foreshadowing the rally in bonds. Now, getting back to the industrials, they have been aided by a phenomenal run in unlikely bellwether, IBM. The stock massacred in 1987 after hitting an all-time high of 176 in March of that year, fell to an unbelievable $40 a share in 1993. It has since bounded to multi-year highs, today aided by a Merrill Lynch upgrade, as you heard, where analyst Dan Mandresh raised his target to $195 a share from $150. David Faber just told me that a trader called him and said if you would have bought IBM in 1987, you'd just be breaking even today, where you could have made 10 times your money in Fannie Mae over the same period. Now, as for the overall market, hard to identify factors that would stop this bull in its tracks. If the market is blindsided, it could prove troublesome given the above-average rates of return over the last 2 years and the lofty valuations across the board. And that is Ticker Talk for a Friday. All right, time now for a pit stop, and every day we talk commodities with a special guest, show you what's happening also in the futures markets. Today, we are joined by Bill Byers, Director of Futures Research at Bear Stearns. Bill, good to see you again. Thanks for being with us today.
Hi, Ron. How are you?
All right, thanks. This copper market is quite interesting, helping to buoy the CRB index today. What is behind this run-up when published reports tell us that there's a lot of copper around in the world?
Okay, I think you have to take a little bit of a step back with the Sumitomo situation. The volatility that you've had is basically speculation as to whether the copper inventories that were accumulated by Sumitomo have been liquidated. There was a story yesterday in the Financial Times that also made the rounds a couple days before that, that there were warehouse stocks in Rotterdam that hadn't been discovered and hadn't been liquidated. And there was an article today in the Wall Street Journal that more or less took issue with that. So I think that you had a market down yesterday on the Financial Times article and a market up today on the Journal article.
All right. Any of this short squeeze catching those who sold the market short by surprise?
I think so. I think you've got some technical factors at work as well. Obviously, there have been a lot of very well advertised and very large shorts in the market. Anytime you get a kick up like this, you get some short covering, absolutely. And I think that fueled the rally today.
How about the natural gas market, Bill? Rather sizable gains in natural gas stocks or equities also doing better. Is this just a function of cold weather here?
I think that's the primary driver right now. Stocks levels for natural gas are not in that bad a shape. We're still running less than last year or lower than last year, but they're not particularly tight. They're not anywhere near the situation in heating oil.
Do you expect the energy market, though, will remain firm here until the weather picture clears up a little bit?
Yeah, that's exactly the scenario that I'd look for. I think the market should remain relatively firm probably through January.
Meat markets have been looking pretty good. Yesterday it was cattle, today it was pork bellies. What do you make of that?
I think there's basically a lot of back and forth going on in these markets. You've got some speculative factors at work. I think a lot of people were not really focused on those markets. The activity, you may have had some distortions today.
All right. Bill, always a pleasure. Appreciate you spending the time.
Thanks a lot.
Bill Byers, Director of Futures Research at Bear Stearns. All right, let's go over to Bill Griffith now to travel along the yield curve and see what's happening there. William?
All right, Ron, thank you very much. It's a perfect world, as one trader told Reuters earlier today on the wires. As far as the bond market goes, you've got constructive data, as the traders like to call it, all this week. And today we had more of that. Industrial production down 0.5%. In October, capacity utilization seems to be trending lower at this point now. The number for October was lower than the one we saw in September. And, of course, the traders like that. Although this may have been profit-taking day for the bond markets ahead of the auctions coming up next week, which I'll talk about. But earlier this week, of course, this 30-year Treasury hit multi-month lows in terms of yield, with the yield around 6.41%. We've come higher since that time. Next week, we've got some auctions. The 2-year note, $18.25 billion of 2-year notes will go off on Tuesday. And on Wednesday, $12.5 billion of 5-year notes. By the way, speaking of those 5-year notes, they were rather strong earlier in the day. George Soros, the hedge fund heavyweight, was said to be in the market buying in size as far as 5-year notes go. But today has been a choppy day. You saw the 30-year yield. It's back up a bit, but not by much, certainly in the scheme of things. Ron?
All right. Thank you, sir. See you on Market Wrap, I trust?
I'll be in a few minutes, yes.
Okay.
Go put my jacket on.
This is a jacketless show, by the way, just so you know, in case you haven't noticed lately. Coming next, a complete rundown of overseas market action. Plus, we'll head back down to the New York Stock Exchange. Bob Pisani will take a look at some of today's most actively traded issues. We'll do that and more when we come back.
Even CNBC needs a business break. Get ready for Conan, December 2nd.
The first thing she said was, "Mommy, I've never seen the clouds from the top before." Flying for our daughter came sooner than any of us expected.
Hey, you get to go on first.
They said she needed some tests in Boston. We didn't know how we were going to pay for the flight. But then our doctor told us about this thing called Miles for Kids in Need. It's an American Airlines program where people donate some of their frequent flyer miles, and American picks up the rest. I hear they've helped thousands of kids. You know, I really wasn't sure how she'd take to the idea of flying, but she loves it. She can't wait to get up there again, where she says the sun is always shining and the sky is always blue.
Their goals are as basic as a first home, an education, a secure retirement. Yet they own over half of all the stock in America. They are individual investors, and for them nothing is more valuable than information. Today, NASDAQ is delivering news about companies, performance tracking, even timely stock quotes, instantly. So if you're an investor who seeks vital information, you now know where to find it.
AccuTrade for Windows gives investors more power at a lower cost than any online system available.
That's a bold claim to make, but if you trade stocks, options, or mutual funds with AccuTrade for Windows, you'll control your portfolio like never before.
For the first time ever, investors can program trading strategies to automatically buy and sell upon command. Now you can monitor the markets and your investments without being in front of your PC.
Imagine creating a group of stocks called baskets to track and analyze. Then buy or sell the entire basket with a single command. Now that's power.
No other investing tool can match AccuTrade for Windows' sophisticated option trading capabilities.
Plus, you'll get integrated tax lot accounting and access to valuable investor information services.
Best of all, the power doesn't cost more because compared to a Schwab and Fidelity, you'll save money with AccuTrade's low commissions.
So call now and we'll send you a demo disc or CD-ROM. You can even visit us at our website, and it's all free.
AccuTrade for Windows. Power tools for the active investor.
All right, before we close out the hour, let's take a look at how overseas markets fared today, beginning in London, where stocks jumped as investors shook off interest rate worries and turned instead to today's rally on Wall Street, which, by the way, continues apace. The Financial Times 100 index picked up another 32 points, now within striking distance of 4,000. French shares also rallied, with the blue chip CAC 40 closing up 22 points and change to 2240.33. While in Frankfurt, German stocks set yet another record. The DAX up about 19 points to 2795.80. The index adding about 56 points this week, a coordinated bull market in stocks around the world, at least in the Western world. In Mexico, the Bolsa down about 19 3/4 points to 3372.48. Turning to the Asian markets, Tokyo stocks closed lower, shedding gains posted earlier this session. The Nikkei fell about 101 points to 20,929.73. And in Hong Kong, stocks reversed a 5-day winning streak, ending sharply lower, coming off a record-closing high. The Hang Seng Index fell about 115 points to end back below 13,000 after having just closed there yesterday. Germany's state-owned telephone company is going public on Monday at the New York Stock Exchange, as well as at the Tokyo and German exchanges. Maria Bartiromo has a preview.
The telephone industry has never been so competitive, with deep-pocketed partnerships, government deregulation, and plenty of competition. It's one reason Germany's state-owned telephone company is looking to raise money in the largest initial public offering ever. But the Deutsche Telekom offering comes at a bloated time for the IPO market.
The biggest part of the concern on the marketplace today is going to be the size of the offering, which is supposed to be in excess of $13 billion. And the fear is that it will take much of the energy and the buying momentum out of the IPO market, which is standing on shaky ground to begin with.
The opening bell at the New York Stock Exchange will kick off trading in New York, matching similar events in Tokyo and Frankfurt, in a deal which has been 6 times oversubscribed globally. But even with a lot of hype, as well as a higher opening on day one of trading, long-term success is very dependent on financial stability, something which has stirred some controversy.
With this particular deal, we feel that a company that's, that they'll probably price it at about 16 times 97 earnings. And that's quite a bit more expensive than most other Northern European landline telephone companies. Long term, this is a company that will not have an easy time growing revenues at more than 10% a year.
Europe's largest telephone company has a virtual monopoly on all telecom services, but it's also saddled with $60 billion in debt and comes amidst a flurry of other telecom deals coming to market.
The Deutsche Telekom is going to be the lead stock for a series of other international telecom stocks, one of which is going to be the BP Cellular. Next week, we also have the Venezuelan telephone company, and there should be a host of other companies that will be coming public that have international telecommunication appeal.
The Deutsche Telekom offering has been widely talked about on Wall Street, indicating a large amount of interest. And the company's 3 largest underwriters, including Goldman Sachs, stand to earn $100 million each from the IPO. And with such a huge size, the deal will likely represent a test, not only for the absorption of U.S. investors, but that of global investor interest in IPOs as well. Maria Bartiromo, CNBC Business News, New York.
All right, let's head back down to the New York Stock Exchange. Bob Pisani standing by with a look at some of today's most actively traded stocks. Robert.
Good afternoon, Ronald. Well, as you said earlier, news of a possible breakthrough on the Texaco situation, sending Texaco stocks way up right now. 1.25, 101.25 up 2 7/8 when you were about to go on about an hour ago at 97. So really, most of that move up in the last 15 or 20 minutes. So a dramatic move in Texaco recently. Let's take a look at some of the most active traded stocks today. Intel, of course, no surprise there. 116 and 1/32 down 3 3/8. Hey, don't cry for Intel. Their low was July 24th at 69. Now, since July 24th's low, they've been up 68%. So no problems there with Intel. Health management systems, let's take a look at them. They are at down 7. I think it should be 14 3/4 there, down 7 3/8. And that system, the fourth quarter earnings there, 15 to 16 cents versus 17 cents a year ago for that. Other companies that are in this area also in a lot of trouble. Medifis, Cerner Corporation also down rather dramatically. Let's take a look also at Walmart, about 24.5 unchanged right now. That was at 27.5 a month ago. So Walmart having a little bit of problems. Not surprising, though. The retailers in general have been having some problems. They announced today they were doubling their share buyback program to $400 million. Dayton Hudson, Kmart, Sears also down somewhat in the last 5 days. IBM 144.5 up 7 5/8. Merrill Lynch analysts, as you've been hearing all day, hit a target of 195 on this stock for the year 1988. It was the leader in the Dow, and as Ron mentioned, pre-1987 high of 175 that was hit in August of 1987. Also, Vimple, VIP, of course, this is the first Russian companies we've been reporting all day on the New York Stock Exchange. And what a scene earlier this morning. Not just the Russian dancers. I was just in an elevator with 6 accordion players from Russia telling me how to play the accordion. We We had all sorts of people down on the floor speaking Russian on the floor at the booth as it opened, and what a scene that was. Vimple 29 up 8.5 on the day. Okay, Ron, back to you.
Thank you, Bob. Bob Pisani reporting from the New York Stock Exchange. And as we wrap up a Friday session, an options expiration Friday, the double witching today working magic on Wall Street with the Dow Industrial Average, as you heard, getting help from IBM, Goodyear, from Merck, and from Texaco, of course. Those stocks account for more than the 38-point gain we're seeing thus far. The Dow up 10 days in a row, 8 record closing highs, if indeed the gains hold here in the final few minutes of trading. 63.51, the handle on the Dow. We're going to see more than 500 million shares change hands on the New York Stock Exchange today. Quite a busy session. Advances just beating declines by a narrow margin here, 12 to 11, not even. 880 stocks are unchanged. The NASDAQ composite going the other way after flirting with record levels in recent days, down 7 2/3. Microsoft and Intel slumping late afternoon today, 522.5 million shares changing hands there. As for the Standard & Poor's 500, another record there. Program trading restrictions in effect at the New York Stock Exchange earlier. They are not in effect now, but more than 100 times so far this year, we have seen program trading curbs at the big board. The S&P's at 738.27. And in fact, the stock market today overcoming some weakness in the 30-year Treasury bond, which may have sold off on the wholesale inventories report out today, which was a little bit better than expected, showing a little more economic strength. Also, University of Michigan's Consumer Confidence Index showed a pickup as well, which may have hit the bond market here. No other factors really obvious today that would hurt bonds. A balanced budget talk still in the pipeline, and slow but steady economic growth with little inflation also still evident. The bond giving back some of its recent gains, down 0.5 points, the yield 6.46%. Coming next, the closing bell on Wall Street. You're watching Street Signs on CNBC.
This program is sponsored by Brown & Company. Deep discounts for the experienced investor.
Brown & Company, going down. George Brown here. Experienced investors come to Brown & Company for lower rates, like our $29 flat rate, which means commission rates up to 86% lower than regular discounters, plus a 10% volume rebate and up to 2% on margin. But it's not a free ride. We only take market-savvy investors. Call for our free information kit. Oops. Went a little bit too low. Brown & Company. Who do those other guys think they're kidding?
From the people who shape national policy to the people who cover our world and how we see it. The people, the issues, the opinions. Equal Time with Dee Myers and Faye Buchanan. Weeknights only on CNBC.
Oh, the online services charge so much.
If you're a serious investor in using an online service to get stock quotes and financial news, then you should know the switch is on to DTN Wall Street.
Well, in evaluating several other services, I chose DTN because of its price, because I don't have to have an additional phone line, and because of its flexibility. It has a lot of news items on it.
I like the idea that I pay one flat fee a month. I know what I'm going to pay. I do not like surprises.
Stop paying costly access fees for your quotes and news and call DTN Wall Street. In fact, we're so sure you'll like DTN, we'll give you a 30-day free trial. DTN Wall Street. Profitable investing just got easier.
Well, Prodigy is like a French restaurant. Everything's a la carte. Well, with DTN, you get everything for the same cost. And it's a very low cost, 24 hours a day.
The monthly phone charges alone were more than what I pay for DTN. And now I'm saving some real money.
Finally, a deep discount broker that offers simple, no-nonsense trading. Ceres Securities. With Ceres, you can trade as many shares of any type of stock you want and pay a flat fee of just $18. With Ceres, you can trade by phone, internet, or live broker and pay a flat fee of just $18. In fact, we challenge you to find a broker who offers more ways to trade at a lower commission than Ceres. $18 flat fee trading, period. Ceres Securities. Simple, no-nonsense trading.
79 years ago this month, the Bolsheviks stormed the Winter Palace, starting the Russian Revolution. Today, Russian capitalists stormed the New York Stock Exchange with the first ever listing of a Russian company. The Dow closing at its 8th straight record high. Time for Market Wrap with Bill Griffith and Terry Keenan.
Nice hats they're wearing, too, there, Ron. Thank you very much. Good afternoon, everybody. We'll be talking about it, whatever information we can get you on that Texaco settlement case. In fact, we'll be talking with Kwesi Mfume, the head of the NAACP, about that coming up later in Market Wrap. And welcome. I'm Bill Griffith.
And I'm Terry Keenan. Topping our business and financial headlines this Friday, Texaco settles a race discrimination suit less than 2 weeks after disclosure that some of its top executives used racially charged remarks in a tape-recorded conversation. A wild ride for blue chip stocks on this options expiration Friday, despite a pullback in the bond market. The Dow finishing up about 128 points for the week. The latest data adding to signs that the economy is slowing down and inflation fears are abating. The GM auto strike, a drag on industrial production. The auto strike and cost cutting also hurting fourth quarter earnings at GM's Hughes Electronics unit, sending that stock tumbling by about 6% today.
Well, Texaco apparently has settled that massive lawsuit for racial discrimination just days after civil rights leaders called for a boycott of Texaco products until such a settlement was reached. But we won't know the details until they are announced during a news conference in Washington that will be scheduled for 5:30 Eastern Time, and you will see that news conference here live on CNBC. Now, within seconds of the announcement of the settlement, Texaco stock started moving higher. Its low today was 96 3/8. Right now, it is at 101 1/8. That is up 2 3/4 for today's trading. Sean Tully has been following the legal suspense, and he's here with whatever details we may have at all on this settlement. It's breaking. We just learned about it 10 minutes ago.
Yeah, it happened very, very quickly. Of course, the deadline that was imposed by the black leaders, especially Jesse Jackson, was a deadline for picketing. And it really was not a boycott deadline, because the boycott's going to continue even after the settlement, Bill. So, Texaco still faces a lot of problems here to put this affair behind them.
Sean, we know that what the original suit was for about $500 million. Any numbers on what this settlement might entail?
Well, one of the lawyers for the case, Daniel Berger, called the $500 million settlement would be